Welcome to a special AMA in the Defi Dojo Discord. It is February, I love saying that word, 12th, 2024, and we are joined today by the Vela team. Is it Vela or Vela?
Vela, but if Vela sounds sexy for you, you feel free to use it.
It does, but I will call it Vela in respect of the way you say it. So we are joined today by Vela, which I've been calling Vela for, I think, almost like multiple months, half a year now. Glad to be corrected. So if you guys don't know, Vela is a perp dex exchange with a VLP, so sort of a counterparty vault type mechanism, but they're transforming that to be a slightly more risk-off form of CPV. And if you guys have been around me long enough, you know that I find CPVs, which are counterparty vaults, a little bit risky in a bull market. So it's going to be really interesting to see how they've innovated on this specific aspect of tech, as well as everything else they've done. Now, if you've been around the DeFi Dojo Discord, then certainly you remember the first iteration of Vela, where they blew up. They were huge. They were really, really massive, had a lot of success. Then that was like sort of their beta version. They reworked it, and now this is sort of like the relaunch. And now they're also launching Grand Prix. We'll talk about all these things, tons of questions and more. So first of all, let's see who our guests are. Avi is a longtime dojo member. So Avi, why don't you, we'll start with you. What is your role with Vela?
Yeah, so more recently was
Vela, sorry.
About all good. More recently was talking with Dan about helping out with some stuff on the governance front on Arbitrum, but I seem to know a decent amount of people in DeFi now, so I guess partnerships is also going to be something that I'll be working on. But yeah, this is relatively new, so me and Dan have been working closely together for about the last 3 weeks now.
Very cool. Okay, so I know you are all over the place in DeFi. Wherever I go, I find you there, especially in Discords and Telegrams. Jin, what is your role at Vela?
Yeah, so I'm one of the founders and the current product slash like marketing lead. We do a ton of cool stuff together. Avi actually came through another community called Jade and brought in a ton of interested traders and LPers and all sorts of community members. So huge shout out to him and John Ray. I think they've worked together for quite a bit. So Avi's joined us on the governance side, and he's done some great work on the Arbitrum relationship. And in the future, probably some of our governance slash decentralization initiatives. So thank you guys for jumping in with us, and super glad that happened. In terms of my background, I've been in the product and kind of strategy consulting world for about a decade. Really got into crypto around 2017-18, right about the same time I met Travis over at a large consulting firm called BCG. We worked on a ton of Web 2 projects together, ended up liking working with each other, which is, awesome, and started moonlighting in the background in DeFi, building stuff. He's been building much longer than I, but I think product thinking is a strength of mine, and that carries over from industry to industry. So we're quickly able to get off the floor, raise a seed round, and launch our first product, which is called Dex Pools. That eventually pivoted into Vela, and super excited to share a bit more about that. I'll pass it to you, Travis, to kind of jump into your background.
Hey guys, Travis here. I'm one of the founders of Vela, leading the tech side, and I've been in DeFi for as long as it's been called DeFi. An architect and engineer my entire career. One of my previous startups was a crypto tracker called Cryptonaut, which was acquired in 2019. And after that, I went to work at BCG, where I met Dan, and we were cranking on pouring Web 2 stuff for our clients. And decided to quit together and start Vela a couple of years ago. So I'm very excited to be here with you all and tell you more about what we're building.
Fantastic. So it also seems like John Ray, you may have came from the Jade community as well. Is that correct?
Yeah, so I met all of the Vela guys while I was at Jade, and obviously that's where Avi and I met, and Avi was my work wife there. So through that, we obviously made a lot of different connections in DeFi, and I always appreciated how Dan and Travis ran their various projects. I also live in Texas, and I've gotten to be in person with Dan and Travis a lot. So I've operated kind of as a community consultant, helping them find some of the marketing language around how to pitch some of the features that Vela has, and also consulting on key hiring positions. So I'm mostly here on this call as a fanboy because I've been watching your videos since the early calculator guy days, and it's fun to see this partnership come together. And so I'm here to learn, to speak from the Vela side when it makes sense, and to ask any questions that come up.
Fantastic. Well, awesome. Good to have you guys here. All right, let's just dive right in. So Vela has VLP, right? VLP is like GLP. I think most people here know what that means. It's a counterparty vault. It provides liquidity for the trading on the perp DEX. Now, these things are typically a basket of assets with like GMX. We've also seen like some CPVs that are stable coins. Like I think Gaines was the one who first started this idea, and it's been done a few times. You guys have VLP, which is denominated in stables effectively, and is currently getting an APR of 57.49%, and has a price of 1.061%. I'm going to share this, which indicates that it's already up by 6.1%. So return on investment so far. So questions are going to be, what is VLP? Aside from what I just said, how is it different from other counterparty vaults? And is all that APR currently organic, or how is that estimated?
Travis, did you want to take that away since you're architecting some of the new VLP vaults and the recent technical achievements?
Yeah, absolutely. So, VLP is denominated in stables. And let me just talk a little bit about some of the improvements that we are making to the vault that I think is relevant for the discussion here. So the first thing is we've implemented sort of an automated fee mechanism at the contract and server level that, as traders open positions and OI adjusts, let's say the market's going in, long on ARB and BTC and ETH, and 80% of the market is long. Oh,
Oh no, did we just lose him? Oh, he's back.
I think he just tried to short the market.
RIP. He's gone again. This happened to me earlier when I was on a Twitter Spaces, and it was so frustrating. So I totally get it.
It just happened to us on a gaming AMA for Arbitrum grants, and the entire speaker board dropped.
So what I can do is I can take off my this might help. Okay, so maybe I'll have a better hosting connection now. We will see.
Yeah, I can speak to some of it, and I love talking about the high level kind of reasons why we chose synthetic assets and a counterparty vault. It's a really interesting paradigm, right? Like GMX was one of the first, synthetics as well, and I think the interesting thing about it is, number one, it allows you to bootstrap liquidity pretty quick without market makers. And the reason that's important is because when you bring in market makers, you inherently start making deals with the devil. And the best example of that is DYDX. There's a ton of other order books that require market maker intervention. And in order to incentivize these market makers in DEXs, where the order book is relatively transparent, even if the settlement may be off chain, you've probably got to incentivize them with some token commissions, right? Travis, are you back?
hey guys, I'm sorry. I don't know what's going on. I switched to my my phone, so I'm not on Wi-Fi anymore. But can everybody hear me okay?
Loud and clear.
We can. I'm just going over some of the reasons why we chose synthetic assets in a counterparty vault versus going with market makers in an order book. And one of the key reasons
keep
is
going.
because
I'll jump in. Yeah, go ahead. Sure.
Yeah. I'll cover the high level and then I'll pass it to you for all the technical innovations that are happening in the background and have happened. But the main reason is because as soon as you involve market makers, they're going to start demanding most likely your tokens in terms of rewards to add on to their kind of profits around the typical kind of spread and everything else they do. And when that starts happening, you start hurting your community pretty hard. Like you can see DYDX and a lot of the ways they've adjusted and kind of grown. The community has always made a point that the token has just been dumped on them by the institutional partnerships that they've created. And we've always wanted to avoid that and kind of not let market makers and institutional folks kind of do that. However, there are a lot of advantages and disadvantages, trade-offs to both ways of working, and it certainly isn't something where order books are wrong. In fact, I think there's a lot of strengths, and there's even interesting ways you can turn a counterparty vault into an order book, at least synthetically, that we've seen in the market. But we'll dive into those details as we move along. But I just wanted to make that point because it's a very important distinction on why we chose it. And I'll pass it to you, Travis, just to jump through kind of what we've innovated in the space around synthetics.
Before we do that, I just want to mention that I have also spoken to a lot of market makers, and the idea that they are very expensive, the idea that they are often paid in tokens, and the idea that they often dump those tokens or are expected to dump those tokens is all too true. And so you're saying by utilizing a CPV, you guys are avoiding that inherent sell pressure on your asset because you have decentralized provision of liquidity, and those decentralized market makers effectively are being paid primarily in stablecoins, USDC. Here we're seeing 35%, quote unquote, organic fiat yield, and then additionally in escrowed Vela, which most of us are familiar with those mechanics. But we can go over those again, and then also ARB STIP reward. So I'm gonna let you now jump in. T-Squared, your name is Travis, is that right?
Yeah, it's Travis.
All right.
So I'm just going to talk a little bit high level about what we built, and hopefully I don't drop again. So we built a lot of automated systems into the vault that adjust fees dynamically, funding and borrow fees and rebates. So that, as the market swings in any particular direction, if you're a market maker, we are paying rebates that are adjusted in real time. So if you take the opposite side of our vault and help balance the OI, you of course would need to cancel, your risk on a CEX or another platform, but you're essentially receiving, free money and getting a rebate for helping us balance our OI. And we've done a lot of research and put a lot of work into our contracts and our servers to automate this process and make it as smooth and easy as possible. Additionally, and I think I teased this to some of you guys on the last call, we are different than other DEXs in that, we've realized a lot of market makers are used to sort of Web 2 APIs and integrating with CEXs like Binance. And so we've actually created a trade API where you can place trades on behalf of a wallet without ever having to interact with the contracts. And that kind of sets us apart and makes it easy for market makers to build automated strategies on top of Vela without necessarily having to interact with contracts themselves. And we're also incentivizing that bot builder program and that market maker program. The next thing I'll mention is what we're calling FFS, but is essentially our automated fee split. So, when people trade on Vela, fees are generated, whether that be open positions, closed positions, liquidations, and so on and so forth. And imagine, that fee or those fees get split between the vault, which is the VLP holders and the stakers, and then us as a company, right? And what we've done over the last 6 weeks or so, and we've seen stellar results. If you guys look at the VLP chart, it's just amazing. Is we essentially have an automated fee split that adjusts dynamically with a target growth rate for VLP. So from a high level, think about it as we set the target growth rate of VLP to, let's just say for ease of math, 10% or 20% a year, right? And we're constantly measuring that growth rate at the contract level. And then as fees are generated or as traders make profits, let's say in a bull market, a trader hits a home run, right? We may slide that fee split over so that all the fees go back to the vault to ensure that VLP hits that target growth rate, even in times of profit. And so it's just an extra mechanism that is unique to us that we have in place, which ensures that, if you're staking in VLP, not only is it going to be stable, but it's going to be stable and grow in the right direction.
So let's circle back
that's
to that,
something
'cause
we're
that's
super
that's
proud
pretty.
of to roll out. And like I said, we've been testing this on
Oops.
mainnet the last couple of weeks. And if you guys look at the price of VLP, I think it was mentioned at the beginning of the call right before I dropped. It's looking very, very healthy. So I'll stop there and happy to take any more questions around that or the vault.
Yes.
But
Let's circle
by the
back to
way,
this. Go ahead.
just real quick clarification on the language of market maker. When Travis mentions market maker, he mentions anybody can come in and balance the OI and basically farm funding fees, right? So this is not having to
right.
set up like order book liquidity, which is what I was referring to. So just distinguishing those two words is kind of important.
Yes, absolutely. Yeah, there are dedicated market makers, and then there's people who are just market making, which can be anyone providing liquidity, or actually anyone who's trading as well.
Exactly.
That's right.
So here we have VLP Pro. I want to go back and double click on this. Basically, what you're saying is that you want VLP to hit a target APR, annualized return, and not in terms of fees, but rather like in terms of actual increase in value. Right, so VLP price increasing at a rate of 10% per year, underlying backing effectively. And so what you're saying is, as traders see outsized profits or gains, wins, whatever you want to say, then the fee structure goes towards favoring VLP rather than protocol rev, so that VLP will have a disproportionate share of the fees to compensate for trader P&L. Is this accurate?
That is correct.
Got it. Okay. Now clearly the VLP chart looks great right now. And it has sort of like, I guess you could say since December 12th ish. When did you guys roll out this mechanism?
It was about 6 weeks ago, 5-6 weeks ago. Don't quote me exactly on that, but we've been testing it for a while now, and it's been performing incredibly well.
About mid-January, if I remember from our last chat.
So let's just say you started here and it's been up only since. Clearly, that's not like an accurate representation. Past performance does not indicate future results, but it does seem much smoother since, let's just say mid-December. But that could be for any number of reasons. Hopefully, it's for this new mechanism. It does look like a really good chart. Now, question: you're targeting 10% annualized. Has this mechanism kicked in at all? Like, have you seen any impact or effects of this mechanism, or is this just basically the old mechanism going as usual, and it will only kick in if the annualized return starts to go below 10%?
Got it. Oh, and by the way, I see I switched back to my laptop so I can see that you're sharing your screen now. Yeah, so it kicked in mid-January. And yes, the answer is we have seen it. It is dynamic and adjusts in real time. And so at any given time, you may see that the split might be 51-49 or 55-45 and so on and so forth. And so as P&Ls are being realized, this is constantly adjusting to ensure that growth rate.
Okay. So it's not like it's binary, right? So you guys drop below 10% annualized, just like clicks on, and then all of a sudden all the fees are going to VLP. It's a very like floating rate or variable rate where, is this based off of open interest? Is this based off of like actual realized losses? Or is it, this is like not backdoor, but like behind the scenes proprietary algorithm determining this?
Yeah, so I won't share like the exact calculation, but what we are doing is looking at the growth rate of VLP for a snapshot period of time, say 1 or 2 weeks, right? And looking at realized and unrealized P&L, and then making adjustments to the fee split on an interval or in relatively real time as trades are coming in and being opened and closed. And the goal is, as a configurable variable, we set that rate. Let's say it's 10 or 20%. I don't know if Anthony's joining us, but right now the target growth rate is 20%. And so we have the ability to adjust all these variables, obviously. But then, like I mentioned, as trades are opened and closed and profit is realized, or liquidations happen, that sliding adjuster, will go in either direction based on what happened.
Can I ask a quick question to either Dan
Sure.
or Travis? So
Yeah, go ahead.
is there gonna be like any point in time with like the UI refresh, some sort of scale?
Come on. Nope. Haha, okay. Headphones back. Haha, okay. Headphones are working. I'm back. And I can hear you guys. So I missed some good questions. Can you guys give me a quick recap?
If you have seen any other pools kind of take this approach of basically creating like some degree of like an insurance mechanism for liquidity providers or anything similar to this.
Oh, asking me? So we've certainly seen insurance mechanisms. So like, I think one of the oldest ones that I can remember was like Hubble Exchange. They had an insurance pool, and we've seen a few other dexes sort of like create the same thing, or not dexes, but like perp exchanges where you can like deposit into the insurance fund. This is completely different. So this just seems to be like balancing the trade fees or the fees recouped to ensure the health of the CPV. And for that, no, I haven't seen any other protocol try to make the CPVs more healthy. And we've seen like, I'm not going to mention any specific protocols, but we've seen some protocols in recent history do very, very poorly because they had, well, one, low liquidity in their CPVs, and then two, traders just like blew the trades out of the water because they could manipulate the price. It was like thin markets, low market cap assets, and those protocols are really struggling right now. So the fact that you guys have some type of insurance built in, and the fact that it seems to be working so far is really interesting. My thesis lately has been that CPVs are kind of dangerous in a bullish market, and you guys are kind of proving that thesis potentially false. I mean, so looking back at way back to like 627, you can see it goes up and then down and then up and down, but you never go below let's say 1% under baseline of 1-to-1, which is really impressive. So, and all the while, if you're in VLP, what I understand is you're not only getting like intrinsic value accrual in the form of USDC, I imagine. When I go to the APR, it says USDCE. So actually, I do have some quick questions. Here we have VLP. It says USDCE. Are you getting USDCE on top of the VLP price accrual, or is that what we're seeing in that VLP price?
That is the price.
Okay, awesome.
That's the price. Now, we have the ability to distribute real yield in the future, for example, with the staking contracts. But what you see right now, and that sort of when you hovered over that, right, the USDC part is just part of the price appreciation. And then the Vela and the ARB rewards are on top of that.
Okay, awesome. So we'll definitely get to the S Vela and the ARB rewards here in a second. Also, as a reminder to everyone who may have joined a little bit late, please ask questions throughout this AMA, because the winner will receive some S Vela or some pith. I think it's a 250 pith and then like 1250 S Vela. So you can correct me on those numbers. It's money, and it goes to the best questions. So do be asking questions in the chat, and then if you want to like raise your hand at the end and ask questions, you can certainly do that as well. So here we do see that you guys have VLP. You mentioned the cool mechanics behind it. You've mentioned that there's also ARB rewards. I imagine that's STIP. So we're just about to get into the other more gamified mechanics here, but before we do that, let's finish up VLP. You have S Vela and you have ARB. ARB, I imagine, is STIP, but do you want to talk about how that's working?
Yeah, so right now, every few weeks or every time we need to reload the contracts, we're adding some STIP rewards as for the stakers. But we've lowered the amount by like half, because we are saving the last portion of our STIP for another vault for VLP that incentivizes you to stake and lock your VLP longer. I think 6 months is the idea. You guys are one of the first to hear this, by the way. In return, you will get an instant amount of ARB that is going to be very juicy. So you want to get into these vaults ASAP if you believe in VLP. We're also going to be keeping the standard VLP contracts here as well. So you can still stake for escrow Vela and for, of course, the standard rewards.
Okay, so when I hear like there's going to be VLP and then like maybe some time lock VLP vault, my mind immediately goes to like senior and junior tranche, because we've seen so many of these mechanisms in other perp dexes with CPVs. But I am like, that doesn't seem like what's happening here. It seems like you have VLP and then you have like a time locked VLP, which is time locked, I imagine, because it's taking on maybe more risk, or you want the liquidity locked, and because the liquidity is locked up, you guys can do more with it. Can you explain that? I know it's like, we're the first community you're talking to this about, and I'm like, begging you for alpha, but I just want to make sure that I understand specifically the difference between the VLP and like the time locked VLP, and why the time locked VLP would give additional benefits to liquidity providers.
Yeah, so it's still the same token. You're going to mint your VLP, and then you can choose which pool you want to stake into, right? So the standard staking contract allows you to withdraw whenever you want and then redeem. We do want folks to stay in. So that's why we're doing the locked VLP vault. So if you stake in that vault, it'll take 6 months before you can withdraw. But in return, you will get the juiciest APRs you can get out of the comparisons.
Okay, so got it. Is 6 months the longest time? Is it going to be like escrowed locked tokens or V tokenomics, where like the longer you lock, the larger the APR, or is it going to be just like base rate, either binary? You're either liquid or you're illiquid, and if you're illiquid, you're 6 months locked.
Binary. We're trying to keep it as simple as possible, but we've thought about making it tiered, or even allowing folks to withdraw early at a penalty, but we wanted to make it as easy and simple as possible and not have to make it a crazy kind of equation in your head.
And then I'm sure you're already talking to Magpie for liquid lockers, and they're going to launch liquidity pools, and there's going to be a point system and a new token, and all these. I'm kidding, but only partially. Liquid locked is the funniest thing to me. It's like liquid version of inherently, intentionally illiquid things, and I love them. So I can already see potential derivatives for this protocol. All right, awesome. So that's VLP. This is super exciting. Really, Velpi, I know, right? All those Magpie tokens do so well. Why not? We have connections over there. You let us know. Well, if DK Nugo is in here, he will tell them immediately. Okay, so we have Vela at 2.168%. Can you explain the Vela tokenomics?
Yep. So 10% of all fees go to buybacks currently for VLP and Vela stakers. So that S Vela is a number that'll move around based on how much we buy back. So that is a mechanic that's been here since beta. We are actually thinking about adjusting that for V2, which is coming up, but we'll cover that in terms of what's happening with V2 later in the call. But it's an exciting mechanism. The reason why we're reviewing is that we want to make sure it's like gets people excited, right? If buybacks is something that gets people excited, then great. If real yield and just USDC going back to folks for that stake, all the better. So we're weighing a bunch of options, and our community is super involved helping us make this decision. So it's just one of the many things that we collaborate pretty closely with our community on.
Okay, so now I'm sort of seeing where the value add is. So you were saying that if someone signs up with Vela utilizing the Defi Dojo referral link, they get a specific fee discount. And the discount was like 20%, if I remember correctly. That's the same as staking 10,000 Vela. Is that right?
Yeah, that's what I was trying to explain in the proposal I sent to you. So
Correct.
I was going to say the one thing Dan didn't mention about Vela is that it also has kind of this benefit of once you stake it, if you hit one of these thresholds, you start earning discounts on top of whatever other discounts you may already be getting. So if you sign up with the DeFi Dojo referral link, you'll have an inherent discount from that link. And then in addition to that, 25% of all of the fees that you end up paying, you'll get as a rebate in the form of Vela. And we have up to 250,000 Vela to give away over the life of this proposal, which I believe is 90 days. So people can basically, let's say if someone earns an extra 25,000 Vela, that means that they would be getting an extra 25% off in addition to their discount code.
Avi, by the way, your mic is kind of soft. You're like probably 1,000 decibels difference between myself, Steven, and yourself. So I don't know if you're not close
I
to
just
the mic.
realized, is that better?
Yeah, way better.
Way better. Yeah, that's way better. Yep.
I was literally not facing my mic, so that makes sense.
Nice.
Wait, so did you move or did you move the mic?
No, I moved.
I'm so curious as to what your setup is. Okay. Awesome. So let me just try to wrap my head around it one more time. So there's like this inherent 20% discount. So it's effectively as if you are already staking 10,000 Vela, but then additionally you get 25% rebate for all your trading fees, and that goes to you in the form of Vela. And so you will just start to generate Vela by playing around on Vela and trading, and that will generate fees, potentially like organic USDC. You see 3.77% here, as well as more Vela. We've sort of seen these tokenomics before with GMX. Okay, I think I understand. Please correct me if I'm wrong.
No, that's exactly right.
Right.
And then the other thing, I guess, about Vela is that unlike ESGMX, where you have to kind of reserve a certain amount of tokens in order to vest. So I think you had to reserve GLP in order to vest your ESGMX tokens. You can just vest your Vela linearly without having to reserve any value. And it takes about, I think it's 12 months. So it's a linear unlock over 1 year.
A linear unlock over 1 year. Okay, so let me make sure I understand that too. So you will lock your Vela or escrow your Vela, or I really don't like the word escrowed here because it's such a weird term for a locked invested token. But I get it. So you lock your Vela, and then it is locked. And then when you want to start unstaking it, then you click unstake, and then the timer starts, and it's linear. And throughout that linear time frame, are you will you immediately start getting your Vela unlocked linearly? And so all of the still locked unvesting, is that still gaining? Is it still getting APR or not?
So let me separate the two. So Vela itself, as far as I understand, that token when you stake and unstake it, it's fully liquid. So you can go between the two staked and
Okay.
unstaked forms without any issues. The ES Vela is what you earn from the platform in the form of buybacks. So when the protocol
it.
does buybacks and gives you Vela, they won't give it to you in the liquid form, they give it to you in the escrowed form. And then that escrowed form, you can choose to stake to earn further rewards and discounts. Now, if you want to vest that ES Vela to make it liquid, you would have to unstake it and then vest it. And so you won't be
Got
earning
it.
those discount fees anymore.
Got it. Okay, I understand. Now, question: is S Vela like? Is this tokenized, or is it like? Could you see it in a wallet?
Yes.
It's magic points.
Well, I'm not sure how much we're gonna tease. Dan's probably got more insight into that, but we are also, just as a side note, planning additional utility for S Vela in V2.
Ooh.
Come on that, but everything you described is correct.
I want to
And
use it
it's
as
tokenized.
collateral to do like 50x leverage. Okay.
That's actually one of the, like, I think synthetics does that, and you know, things are great when things are going great, but when things aren't so great, there's like a massive risk attached to using your own tokens as
Of course.
collateral. So
Oh yeah, absolutely.
definitely seductive. It's like those, yeah.
I like fruit as much as the next guy, but I'm not trying to have any mangoes out here. Okay.
It was a profitable trading strategy.
Oh wait, wasn't that you? Was that Avi? Is that
It
are you-
was my long lost brother. Yeah.
That's right. Okay. Awesome. So I think I get Vela, Escrow Vela, and VLP. Let's move on to Grand Prix. What is Grand Prix? What's going on here? How does all this work? So it looks like we're in round 3 right now, but walk us through this story.
Yeah, so this came as part of the STIP. And really, it was backed up by our thesis that, you know, a lot of traders in Web3 are in it for the P&L, of course, to win. And winning in the form of just looking at a trading, you know, screen and closing feels okay, but we really want to get that dopamine boost and make it a social trading experience. So I remember back in the day there was like GMX, Blueberry competitions and stuff like that. People loved it. They stopped doing it. I don't know why, but we saw it as an opportunity and a theory that was proven by many other decks is that competition makes people go crazy. Now we wanted to take it one step further. I think just having a leaderboard with your movement is cool, but really Web3 is about community, right? It's about being able to kind of show off your winnings, kind of find the loops that, you know, make you happy. And so we took a lot of inspiration from games like League of Legends or Diablo, Path of Exile, all those games that have seasons, right? And created infrastructure that basically supports the ability to have many different seasons with different mechanics. And within those seasons, rounds that build up to a big finale with different mechanics as well. So each round has been 2 weeks so far, and it has come with a prize pool of 80,000 ARB. The first round was super straightforward. It just introduced the mechanics of the Grand Prix, which allows you to earn credits for qualifying activities, including staking VLP or minting VLP, trading assets, earning PNL. We introduced last round the black market, which is now there's going to be events that happen every now and then that give you a huge boost to specific assets being traded or activities. So that made it a lot more addicting. Folks are now staying on the screen, looking at what's happening, trying to find the best deals. We just introduced a new mechanic with the most recent round that launched today. And it allows you to get a sneak peek of some of the things we're thinking about with Vela utility. But essentially, you're able to spin Vela to buy Nitro Boosts, which give you a extra percentage gain on your credit earnings. So more is coming soon. There's 2 more rounds left, but the leaderboard is essentially fresh right now. I know you see a lot of crazy credits already, but you know, you can get up there on the leaderboard pretty easily if you put in the effort.
Okay, so let's talk about this leaderboard. There is VLP eating good. Yeah, I imagine so. Round 3 prize pool, 80,000 ARB, which, how long is the round 3? So, okay, there we go, 2 weeks. So it looks like it may have just started, right? So 13 days and 80,000 ARB, which is quite a bit. And this person, so I guess these will change, right? Leaderboard can change over time. This person will get 10,000 ARB. And so far they have quite a bit of volume. This is, I guess, a third total volume. So 30-day volume, 16 million, good for them. Average leverage 79x. Oh my gosh, are they like, whew. That's fantastic. And then like if we look at, I guess, towards the bottom where you can still get some meaningful rewards. So if we look at like 243 ARB, that's still a ton of ARB, and their volume, it doesn't exist. So I imagine there's like
if you click down, that's actually a call to another feature. Click on the little drop down caret by his name.
Oh, there we go.
Then click on this separate wallet. See if there's anything that happens. Actually, it's so early, he probably just came in and claimed the daily sign-on bonus twice.
Yep.
Oh,
That's what he did.
Yeah.
Yeah.
And the other thing
That
is
person. Go ahead.
could be VLP minting as well for some of those people if they don't have trading volume.
Wait, so you're saying that like people just by minting VLP, so this person only has $12,000 of volume, and their 30-day volume is only $3,000, and they're gonna get like, how much is ARB worth right now? Last I checked, it was like
$2.
Yeah. So this person's gonna get like $880 for. Well, so this person has $400,000 of volume, but then the other person had like $10,000 of volume. This is fascinating. So what are the best ways to get credits? Because it seems like there's a gamified way to get credits here, where some people are literally doing hundreds of thousands of dollars of volume. Some people are doing $10,000, $3,000 of volume. What is, like, if you were trying to optimize your credits, what would be the way to do that? Give us the alpha.
The best way is to trade and look at black market deals. Use, at least for this round, the meta will be
look at
utilizing...
black market deals. When you say black market deals, do you mean like I have to go talk to Dingo for like some OTC
you
ARB?
You have to talk to some shady NPCs in the night market. Go to round 3 credit system
Round
on the
3,
left side.
on the left side.
If you go down,
okay, here we go.
Yeah. So you can see some deals. So there's the black market deals change in 2 hours, 42 minutes on the right side. Right now, if you trade Optimism tokens, you get 1.4 credits for every dollar, whereas normally you would only get 1 credit for $1. BTC volume is being rewarded at 2.2 for $1.
Okay.
Yeah, and then right below that, you can buy Nitro Boost, which is spend about 20 Vela to get your 20-minute duration. Yeah, and so
I see.
Some cool stuff here.
Right. So if you wanted to like try to really participate in the gamification here, you would, 20 Vela is probably something like I should be I know, I was gonna say I should be able to do this math. It shouldn't be that hard. Like 13, $12 to get 50% boost, and then trade BTC or trade OP to get those additional point boosts. And like if you really wanted to be delta neutral, you could be like, doing a bit of, let's just call it funding rate arbitrage between like Vela and DYDX, or what other platform is highly, or Injective. They both also highly incentivize volume. So you could participate in multiple different platforms simultaneously while staying delta neutral and producing volume for the protocols, while also benefiting from funding rate arbitrage and these point systems.
Yep. There's a lot of different ways you can play in the ecosystem.
I love it. Okay.
Yeah, and it's mentioning, you look on the left side too, some other things like referrals. You get points for people that you bring to the platform that generate credits. You can also mint VLP. There's other ways on the screen there just before. There's a daily check-in essentially to give you credits.
Am I going to the wrong place? I feel like I'm looking at the wrong place.
Go back
left
to the
side
credit
here.
system
Credit
tab.
system.
Yeah.
Round 3 credits.
Oh, back to here. Okay, cool. So
yeah, exactly.
Okay, so
Staking,
each VLP minted is 25. Got it. New VLP redeemed, -25. I got it. Okay, so one VLP, that's like roughly $1, right? $1.06. So per dollar, you're getting like 25 credits.
Yep.
Interesting. Okay. Now I want to go back to the scoreboard So like this person has.
So
Let's
one
see.
thing I'll say, Steven, because
Yeah,
it looks
sorry,
pretty
I'm just
juicy
so
right now.
yeah,
right?
yeah.
It's
I'm
like the first hours
right,
of this
right.
round.
I'm getting too excited.
So
Yeah.
yeah, like because I also when I saw it, I was like, oh my god, this is nuts. And then it's kind of fun because the last couple days of the competition just gets so gnarly. Like people are just kind of going at it back and forth, and you see people moving from spot to spot. So like I think for most people, it's like, you can find really ingenious ways to either like, maybe the dojo link will end up on there because of all the referrals, which would be really cool because then the dojo could win some ARB at some point.
Woo.
But then like you'll see like all these people competing, and then you actually had people with usernames that were like communicating with each other on the leaderboard, like first and second place were like having a conversation back and forth by like changing their username. So there's
Oh,
a
that's
lot
Yeah, I
of
was
fun
going to
stuff that's
mention
been
that.
going on.
It was like marry me, and the other dude's like I have a wife, and that was his username. And they were changing it in real time. I was like, we need a chat bar. Like
That was number 8. So his name is 200 mil and beyond because he reached 200 mil credits in first place last round, and he changed his username to kind of brag.
Wow. Awesome. Okay, cool. So, by the way, the referral system, for those of you wondering, the referral link is currently in Steven's stream. I posted it there in the announcement about this AMA. I will post it as well in affiliate links. That is a official dojo link. It is not my own link. I am not going to be, it's like the revenue is not going to me. It's going to, actually, we haven't figured out how it's going to distribute yet. I think it's going to be distributed like all the other ref link stuff, which is like to the mod team, and then to charity. But we will see. Yeah, that is technically official DeFi Dojo company revenue. So I can't just take it or touch it. So very cool. All right, outstanding. I like it. What is next on this? So we see round 3.
Yeah, so
Do we know what round 4 is?
round 4 introduces another additional mechanic. So there was a set of NFTs that was released for folks that attended the early AMAs as part of the launch for the Grand Prix. You can actually burn it to get credits. So it's not as insane as this round for the Vela boost, but it does layer on something else. And remember, it's additive. So there's a lot of balancing and like patches we have to do to make sure the game is fair, which is set kind of like a game, right? But it starts getting more and more insane as the rounds go on, and then the last round essentially has everything in it. So round 5.
Okay, I like this. I want to do like 100x leverage on 4x and see how many points I can get. Sorry, I'm thinking too much. Let's go back to all this stuff. I know we only have 8 minutes left, so I do want to allow for some questions, right? Remember, guys, this is an AMA with giveaways. So you do want to be winning those giveaways. There's Pith, which is a token that I actually do like. It's like we know Pith is a massive airdrop. It's like the Link competitor, mostly used on Solana, also used in IBC land. Let's get some questions going in these last 8 minutes. So you can either raise your hand if you want, speak out if you also want, or ask questions in the chat. I'm going to go ahead and give, we have some questions from, I've never actually said your name out loud. I'm going to call you Karma, but is it Gayak Karma? How do you say your name? Let's have Nemja with the questions.
Ninja, thank you for the question. So this will be the final round 5 will be the final round of this season, but we are trying to figure out when the next season is, but it might be sooner than later. So definitely stay in touch with the community on Velas to kind of understand when that's going to happen. But that may come with a completely new theme, credit system. We haven't determined some of it yet, but remember, this is the seasonal thing that can continue and have many different kind of adjustments to the mechanics.
So Geek Karma, I can say it right now, says, how about the date for Luck VLP Vault?
Yeah, I don't know if I would have gotten that either. That's too big brain. The date is coming up, so I think we're aiming for this week actually. But we're going through final audits and testing to make sure everything's safe and good to go, and we'll release that once it's ready to go.
All right, coming back to I had a question. Let's talk again about. Oh my gosh, did I forget my own question? I did. Oh, funding rates. You guys have funding rates. Funding rates is one of the things that is not super typical for CPV protocols. Now, I mean, I guess it's becoming more and more popular. Gaines started it. Levana has it. I think even GMX is considering introducing it or has already introduced it. How do funding rates work while also having a CPV? Because my assumption was that if you have a CPV, you always have to pay fees to the liquidity providers. You're not having decentralized market makers pay each other. So can you explain what the role of funding rates is in a protocol with CPVs?
Yep. T, did you want to jump in? I saw you.
Yeah. So we do have funding and borrow rates. So just depending on how much you leverage, how much you borrow from the vault, and then how much OI is going in either direction. Ultimately, these are all mechanics designed to manage risk, right? I've seen protocols with artificial slippage. If you're using oracles, we have mechanics for that as well. And so, would think about it as we always look at the chicken and the egg, right? Um, you can't have every trader win because the vault gets drained, but you can't have every trader lose because then no one comes back. And at the same token, the stakers have to feel safe when they are in effect taking the opposite position of every trader. And so I would look at it as, funding rates are part of a whole strategy of how we manage risk in addition with max OI limits per user and per asset. We're able to adjust the amount of leverage you can use per asset. Let's say we deem the asset very, very risky, like Pepe versus BTC or ETH. You'll see differences in the amount of leverage that you can use. And so that's not to say we will always have funding rates in the future, right? But the way that we look at it is like, what is the suite of tools that we can have at our disposal to manage risk and sort of keep both sides delta neutral or even in terms of risk as best we can, regardless of if it's nice, bull market, bear market, sideways, and so on and so forth.
Yeah, and it's interesting. Like, I feel like synthetic assets is so super interesting because like it's really been around for like 3 to 4 years max, probably less really. And a lot of folks are trying out many different things to de-risk, but also make it favorable for traders so they come back. There's been tons of different things that have kind of come up, right? Like I mentioned before, there's protocols that are trying to create an order book based off of liquidity you provide. There's um, folks that are doing like super crazy multi-asset vaults. There's folks that are doing different types of fees. So, for example, like some of the biggest protocols try to do like a price impact, which is super hurts a lot when like OI is skewed or when they set the settings based on skew. But I think the cool thing is I think there's still a ton of room for innovation. So this kind of segues into our V2 stuff that we're building in the background. And we're thinking about those things, right? Is a stable vault the best solution to bring in mass liquidity, but also de-risk potentially downwards movement for the market?
Yeah, one of the questions I have actually about that stable vault is you guys are using a stable vault for your CPV. And I know a lot of other protocols. So actually, I spoke to DYDX, I don't know, maybe a month ago, and they were saying like one of their biggest pushes this year is going to be to have multi-collateral assets. So they want like you can take over your ETH, your BTC, your whatever, and like that can be collateral for trades, right? Mixed collateral, multi-collateral, whatever you want to call it. You guys have one asset, like it's stable coins in VLP as a CPV. Do you ever plan on having multi-collateral or being able to open up trades against different forms of collateral, or is it always going to be like, your traditional perp dex?
We have the ability to, but we're running a bunch of models to make sure we're doing the right thing because stable vaults are safer in a lot of ways, right? And it promotes stability. But that being said, there's a large chunk of traders, liquidity providers that are very risk on, right? So if they're in crypto and they're putting their assets there, they're wanting to see the 30 to 50x. They're looking to get crazy APR, and they're okay with taking losses when it goes to a bear. So we're running all sorts of like simulations and discussions internally just to make sure we're doing the right thing. But that's certainly something we're thinking about.
Yeah, and I would say more than likely, you will see us have some kind of iteration of multi-asset. We do need to take into account, like with FFS and our dynamic fee split, you suddenly have to account for, hey, what if traders are losing and there are no home runs, but one of your core vault assets just dumped, right? Your VLP chart might not look so pretty. And so, stables are great in bear markets, maybe not as exciting in bull markets, but we're in a bull market, right? And ultimately, we have to weigh, there's just a ton of TVL out there in other assets versus stables. And so we've talked about this a lot internally. And I can say, I think you'll probably see multi-asset somewhere in our future for sure.
Okay, that is exciting. One of the questions I have, because we've had some good questions here from the community, I want to now ask a terrible question. How dumb would it be if you could use VLP as collateral?
Oh God. I don't think it's dumb. I think it's just one of those things where the more you
the
lose,
protocol become?
it just creates a house of cards, and it has obvious upside, but very obvious trade-offs as well.
So a few years ago, there was a man named Do Kwon. He had this. I'm kidding.
And yep, I put a lot of my money into Luna, unfortunately.
So
no.
There's a lot of pain in this laugh for all of us.
Right. I would say before we go to VLP as collateral, we'll look at some other types of collateral.
We'll look at getting GLP in, or no, I'm kidding.
that would be hilarious too. Okay, more serious questions though. I'm gonna let the community have let's say 5 more minutes to type questions, to ask questions, and in the interim, you guys have talked a lot about V2. Can you remind me what the most major upgrades from the current iteration, which is V1 to V2, are going to be? So earlier, before we sort of started this call, you said that there were going to be some UI upgrades. What else is happening in V2 that we might not know about?
Yeah, I'll cover the high level, and because some of these decisions are still being made, even though the development may actually be pretty far along. So the categories of things that we're looking to enhance include a few pretty large items, including insurance, which what we call FFS, or Travis, do you even remember what that acronym is means now? I always forget.
Oh, FFS. That was Anthony's thing, man. We could put him on the spot if he was here, but I don't. I still call it dynamic fee split. We'll have to get that in the docs for sure.
Yeah, something
exactly.
fee split, but you guys didn't hear that we didn't know what our own acronym meant here. That means it's before alpha, right? So insurance is one of the really important things, right? So we're enhancing that quite a bit. Dynamic fee split, I'll say DFS here, just so we all understand what it is a step one towards that, and a core kind of component of it. We're also thinking how do you use unutilized OI? A lot of platforms have this problem when they have so much collateral or vault liquidity, but it's not really being used, it's just sitting there. So there's ways that you can potentially use that, and that's the only hint that I'll give. It is some really cool technical stuff. So Travis can probably expand on it without saying too much. We're also thinking about how we hedge against the market. So that could be multi-asset, that could be a variety of other ways. So that is likely going to be part of V2 as well. Asset flexibility. So that goes back to the price feed we use and data sources. We're going to be expanding the tent a bit there. Pith is a great partner, but also they have, certain things that they cannot do that we're going to look into and add on to our infrastructure. We are probably one of the best platforms when it comes to trigger management and trading controls. Like if you use us versus a GMX, for example, we just blow them out of the water. And I'll give them credit where credit's due, but that is an area we've always been better at. We're going to be expanding on that to let you manage your trades even better with cross margin. So that is already in the research and development phase, but it allows you to kind of turn on a setting to say, hey, I want to kind of use what I have in my account to apply to my trades, or you don't have to, click that button too, right? If you don't like cross margin trading. And so that is all stacked on top of a new UI to make everything a lot easier to navigate, to bring some excitement and frame the V2 in an exciting way, right? So I'm trying not to say too much because first of all, there's some things that are still being decided in our R&D and we have to confirm they work. Number two, there's certain things that I think I want to be a surprise, and you guys will love it once it comes out.
So we did get some great questions. Go ahead.
I was gonna say I do happen to know a guy who might be at this AMA who has a lot of experience with yield optimization strategies and vaults. So it might be an interesting opportunity to work together on that in the future. And I guess one thing I want to say, and I mean, I don't know, this isn't giving anything away necessarily, but one of my big priorities for working with Vela is to help attract other people to build on top of not only VLP, but some other mechanics. So I think, what Dan is talking about, there could be a lot of really interesting strategies and a lot of interesting partnerships that can come of that. So it's really exciting. And I think it's going to help VLP kind of retain its position as like the #1 organic yield source on Arbitrum, which is going to be pretty dope.
So are you guys looking, I mean, there are so many additional questions here. I know we're technically over time here, but like, are you trying to be what GMX was maybe like last end of the bull cycle and like throughout the bear, where everyone on Arbitrum was building on top of GMX to try to, squeeze pennies out of the bear market? Now we have a bull market, which means volume is going to increase dramatically. TVL is going to increase dramatically. The movement of funds is going to increase dramatically. Are you trying to capture that same sort of spark by having everyone build on top of VLP, or is it a new sort of angle that you guys are going after? Like, is it the composability of the VLP asset that you're looking at for building on top of Vela, or is it some other angle?
It's many things, right? So 2 audiences, liquidity providers and traders, right? Mm-hmm. We're trying to empower them with tools and optionality. And I think the best way to do that is not to build everything yourself, but to have talented builders building on top of you. So that's why Travis mentioned we have like an open API for anybody that wants to build bots. That's super powerful, right? For people that want to not only just build bots for trading, but also hook in and like provide analytics or automation. One of our partners is looking to copy trading for us. On the VLP side, Volca already has a leverage vault where you can leverage VLP, which is pretty insane using their vault strategies. But beyond that, and just basically make an ecosystem, which I think GMX is doing a great job of, and it makes your product just that much more sticky if you can attract builders to build on top of you and that have their own users, right? I think the last thing for traders is aggregators. So we're in discussions with Raise Trade and a variety of other aggregators to get our application within their ecosystem, and that'll just expand distribution. But I'll pass it to you, Travis. You probably have some thoughts to share as well.
Yeah, no, I was just going to say, we're not we're not trying to, do what GMX did or be GMX in any way or anything like that. But ultimately, we absolutely want to be a platform, where other builders build. I think what Dan said is spot on, which is, you want to attract talented builders that can build on top of you and build great things that maybe your internal team didn't think of or couldn't build or whatever the case, right? New and interesting use cases for VLP or for traders or trade strategies and so on and so forth. And so we just want to make our platform as composable as possible, whether that be on the VLP side which we've already had some really great partners build on top of VLP, or on the trading side and the API side, where we've got some early partners building bots on top of us, and we're going to continue to expand upon that program. And ultimately, I think we're going to see a ton of TVL. We're already seeing a ton of TVL and a ton of activity come back to DeFi and the bull markets in full swing, and we want to capture as much of that as possible. I mean, I see a future. I'm an idealist where when we started Vela, we talked about we want you to be able to trade like you're on a CEX, but we want you to have self custody and control of your funds. So SBF can't YOLO your funds into some random shit and lose all your money. You know what I mean? And so yeah, that's the goal.
Rehypothecation is the future, man. Okay, so thank you for those answers. We do have a couple more questions, and then we'll wrap it up. So one of the questions from Lorem is, what is the bribe incentive strategy for Aerodrome on Base?
Oh man, I wish Burke was here for us. T squared, Travis, do you know? Because I've been out of touch with that recently.
That's all right. No, look, I mean, I saw some people in the chat asking about Base, which I love. I think that's interesting. I mean, the reality is 99% of our volume in TVL is on Arbitrum, and we took a bet on Base because of Coinbase, right? And the hopes that they'll be able to onboard their 100 million users to DeFi. And we can have a separate discussion about the Base ecosystem and how it's doing and incentives and things like that. But all the stuff we've been building and the traction we've seen in STIP, et cetera, has been on Arbitrum. That being said, Base does have a little bit of trading volume, and it does have a little bit of TVL, and it is an ecosystem we support. So you can stake there, you can trade there, and we do have incentives there on Aerodrome. I can't speak specifically to our bribe strategy. Burke, who's our one of our head of partnerships and product, one of our product guys, has put together that strategy, so I can't speak to it exactly, but I know that we are refilling it and we are engaging with it and keeping it going. So if you guys are interested in staking on Base versus Arbitrum, you can certainly do that. You can bridge over, and there are some attractive APYs.
But if you do that, like, you're not going to generate any credits for Grand Prix, is that correct?
You will.
You will? Okay, so if I bridged over to Base and I wanted to participate in, like, I understand that counterparty vault APRs can be fickle, that they're not like fixed rate, that they can go up or down depending on trader P&L. But if I wanted to bridge over and participate in VLP because it's a higher, predicted APR, then I could do that, and I would still get the same points that I would have from doing this on Arbitrum.
Yes. Don't say that too many times, or the Arbitrum team might come kick our asses. But yes.
I will let them know that you are incentivizing people leaving their chain and going on to Base.
I wish I had the soundboard right now so I could do the Darth Vader. No.
Okay, that is cool. That is really good to know. And the same goes for trading volume. So if I wanted to like trade, because for whatever reasons I think the funding rates are better on Base, that would also go like the same thing for credits and the black. Okay, love it, awesome. So the other question is a serious question. Go ahead.
Just to note, because TVL is small on Base,
Right.
that means OI limits, that kind of thing, are very, very small as well.
Yes.
So you wouldn't necessarily be able to leverage up and trade as much, certainly as you can on Arbitrum. So yeah.
But if you wanted like 100x a dollar, you could definitely do it.
It's great for the humble farmer.
That's right. Okay. Question. It's kind of a joke question, kind of a not joke question, which is when pre-market perp. So we've seen an explosion in interest in pre-market assets, on Avo, on Whales Market, on Hyperliquid. Do you guys have any interest in doing those with like a real robust CPV model? Or is that something that it's interesting, it's just not really your niche?
It's very interesting, and I think listing relevant assets is something you must do to stay relevant, right? Like, sure, if you're a GMX or DYDX, maybe you don't have to, just because you just have the lion's share of market makers and traders and attention. But I think most folks that are up and comers, including like hyperliquids that are doing fantastic, are finding that strategy really strong. Now, for us, it's like we would love to do it, but what's more important? Making sure we have the most robust LP system that can support hundreds of thousands of dollars of liquidity, or working on pre-market perps. And for right now, we want to get to a V2, and that might come with some features like pre-market perps, but it certainly wouldn't be the flagship, right? So it's been discussed a lot, and I love them, honestly. I think it's a super cool feature. We've just got other low-hanging fruit to tackle, and that may be something we look at later.
I love that this guy has like more than twice as many wins and losses and has negative 13,000 as his P&L.
Yo, that's the story of my life. If you look at my Apex history, it's really sad.
I wonder what Groot thinks about this. Okay, well, I won't hold you guys that much longer. I think that's like all the questions that we have. Well, Lauren has one more. How many users activity? Well, yeah, I think Avi, you already answered this one. So
there was one thing I kind of wanted to like close on, which I guess like kind of touched on in the beginning, which is more kind of forward-looking, big picture for Vela, like 2-3 years from now. And I don't know, when Dan and Travis kind of initially told me about this, it kind of just opened my mind a little bit. So do you guys want to chat about just kind of like the API and the potential for that, and kind of like trading desks and like attracting maybe like institutional players, and maybe even some of the like more legal stuff that Vela has pursued that is going to kind of enable them to be maybe at the forefront of that once certain jurisdictions are, have their laws set up properly to allow for DeFi to exist?
What's the word for like pre-alpha? So I think this is like super pre-alpha. Well, it kind of rolls up to two strategic things we've been thinking about. Number one is we believe that centralized liquidity and the ability to play within multiple chains without the trade-off of split liquidity is something that is technically really challenging, but the ROI on it would be amazing. And so a lot of networks have come to us wanting us to build. We've been really hesitant just because we don't want to invest in something too early, like base, right, for example, right, and distract our team too much. But if we were able to have a centralized infrastructure that includes cross-chain liquidity or something similar, that would open the doors to, I believe, billions of dollars of liquidity, especially with narratives like BTC-based chains and things like that are coming up. I just think that you have to be composable with multiple networks. The other big bet we're taking is, DeFi is still in its nascent stages, even though it's been around for, more than 5 years at this point. There's a lot of, regulatory advancements that have happened, including the stuff happening in Europe with MiCA, of course, the SEC. We don't serve US customers currently, but we are looking for a way to get licensed across a ton of jurisdictions. We have one license. We are looking at several more. Now, is it going to be necessarily Vela? I don't know. But what I do know is that, we're getting ahead of the curve, and it is a strategy that I think is worth investing in right now. So that's all I'll say.
Yeah, I put you on the spot a little bit, so I apologize for that. But I just, that's something that got me really hyped. And I think, yeah, it's going to be really exciting as things continue to grow. And I'm excited to be working with you guys.
Yeah, I think it speaks more to our culture and vision too. Like, we want to be big thinkers, and it doesn't necessarily mean that, we're trying to do the impossible, but it should be near impossible, right? Like aiming really high and trying to do what's not only good for the ecosystem, but, build out something that's going to have huge impact on, possibly society, right? If we're able to find the right mix of decentralization with the world of finance. The other thing is, we're always thinking long term, and I think that's one of the reasons Avi and John vibe really well with us. They were always like the good guys over on the projects they were at, and like really wanted to find ways to bring value to the ecosystem and community. So, yes, next quarter V2 is probably going to come out, but we're already thinking about like what's V3, V4, and where we can go beyond that, because it is a super competitive ecosystem, and there are a lot of smart people building awesome perps platforms. And I think without that vision and North Star, it's just super hard to stay ahead and build the future.
Well, thank you so much for those closing thoughts. It's a good note to end on. Really appreciate you guys coming out for this AMA and for doing a giveaway with this community. I hope you guys have a ton of success with this Grand Prix and with V2. And please keep us updated both in the chats and me, because whatever information you disseminate to me, I will do my best to get to the community. For everyone else, thank you so much for tuning in, listening, and asking questions, and have a wonderful rest of your night.